So we joked before we started talking here today that the scenario that we were going to come up with was actually my true story, right? As soon as we joked about that, the first thing that went into my head is, okay, I now have $8 million. It's definitely changed my life. What are the tax implications on getting that much money? That's something that's something tough to navigate that a lot of people aren't really thinking about when that happens. I guess if you're a business owner, you probably are. But to come into that kind of money, how would you assist someone like that in that situation in reducing their tax burden and maybe maximizing their wealth preservation and growth?
That's something we do with every client. We gather, we'll always gather their current tax documents. I put together a tax snapshot so it can show you exactly where you are, so we can determine the next dollar that you earn. If it's earned income, how is it going to be taxed? If it's capital gain income, how is it going to be taxed? So we have a really good sight line into how things that fall under your tax return will be income tax. And to your point, if you sell that business for $8 million, is it really $8 million? Because you're going to owe taxes on that. Mm-hmm. And is there a way to spread that tax out? Is there a way to do that in a more efficient manner? Those are the things that we really want to really focus on. And same thing with someone who's retired and they have money in a retirement account that's never been taxed. That's all taxed, pre-tax contributions in many cases, most cases. You have to think about it. That's not $1 million 401k. It's an $800,000 401k. Think of it that way. So that's something that we do focus a great deal on. One of the things that we can do is where we have money that's outside of retirement accounts. In many cases, there are losses that can be realized, which brings those losses onto the tax return and can offset some of those gains. And so 2022 was a year where there were a lot of losses that could be realized. And if you're not in the right kinds of investment tools or strategies, you don't always have the opportunity to realize those losses. They're just on paper, but it's not a way that you can physically go in and manage for that. So that's something we bring to the table, is finding ways and losses that we can use for tax purposes that don't undermine our long-term investment strategy. And then part of it is back to that tax snapshot. Sometimes you just need to be prepared. You do everything that you can to avoid paying a tax. Obviously, tax avoidance, not tax fraud, but you want to be avoiding the tax as best as you can. But up to a point, those taxes, if you want to spend your money and live your lifestyle, at some point, we're going to have to recognize some of that income. And so that's what we're trying to balance with that tax snapshot, so that there isn't a big surprise. So if that $8 million sale happens and we know about ballpark what the tax implications are going to be for that, we need to be prepared for that and then plan with the post-tax value from there. So it's really preparing and planning going forward. But there is a lot we can do given the right opportunities to try to mitigate that. So if you like what you heard today and any of our discussion resonates with you, we always say here at Good Financial Services, it all starts with a conversation. So just write in the comments below or go to our website, goodfinancial.com, and just check off that you'd like to set up a conversation. And we're happy to just chat and see where your situation is. And I'm sure we can provide advice and help along the way.